All right, what's going on, guys? I hope you're having a wonderful night. I wish I could have filmed this on the computer, but I'm having some technical difficulties, but I will still show you some charts here. I want to talk about what's going on, but before that, I need to announce really important news. We're going to stream tonight at 9 p.m. Pacific time. I know it's late, but I have to get to a meeting. That's why I'm in such a hurry. And, well, we're still good. We have a lot to talk about, and even better news, I'm going to stream tomorrow morning, so be on 6 a.m. But you have to like this video and drop a comment and just tell me something about yourself. I don't know. But if you're new to the channel, like the video, subscribe. 5-day videos a day, stock market news. I recap the markets, go over options trading, day trading, all that. If you need help with it, free stock trading course below. But let's get into this. This is important. I want to talk about understanding why markets sell off, and literally just understanding a market sell-off, especially in related to context with what's been going on in the market. A lot of people have, I need to let Jax out before he starts complaining, but a lot of people are hearing this news, you know, mainly it's related to like the yield curve. When you have it going, you know, why could something like the yield curve, why does it make the market go down? And then if the Fed is like, okay, the yield curve doesn't matter, why is the market still going down, or why doesn't it go up? You know, these are the questions to ask, and this is what that people want to know. But it's just like, how does this news that comes out every day in certain news and bonds and the price of oil, why is it having these effects on the market? When you hear me say this, it's understanding why. So the key to understanding a market sell-off, and also too what's going on in China, is understanding future value. So this is important because the future value of something is embedded within stocks and within options. So I'm going to show you guys stuff on the chart. You know, this is what I'm talking about here. You know, how come the market's doing what it's doing? Literally, why is it going down? Why is it going down so sharply and out of nowhere? Why? Especially when it's been going up, and what explains these? And really, these are all shocks, and these are people's expectations of future value changing, because when they say trade war, when they say something's going to happen, it doesn't immediately affect a company. Apple doesn't immediately lose money when bad news comes out. Facebook doesn't necessarily when the Cambridge Analytica scandal comes out. It's not like Facebook just lost all their money or anything, but why do people sell off those events? Because they're pricing in the future value of now, okay, maybe they're going to make less money. Or even then, why do they go up? And that was even a case if you go look at the play I made on Friday. It was $100 into 800 on an option. And Lulu is a really great example of this case, because it went up every quarter. From, you know, 2017, you had this in-betweens because they started to make more money, so the underlying value is good. There's a value in that stock, but what started to happen is as they were doing better and better and better, and they started to expect more, and now the future value. People started pricing in now the future of what Lulu was going to do in 5 years, 10 years, 15 years, and that's what comes into companies, is the future value. That's why Amazon, you know, it's funny, I could go through, this is one of my best examples with it, and it was so funny because I was even thinking about it too. It shows the idea of long term. Like if I told you guys, hey, I bought Amazon at $300 a share, you'd be like, wow, you killed it. You know, you're up, what, 800%? For 400%? No, 5, 6, yeah, about 5 or 6%, 600% from there. You'd be like, wow, you're cool. You know, you must have timed it great, but look from, you know, 15, that's like 300 or whatever. It was at 300 below that. 2013 it was at 291. It was at $200 and even $50 in 2010. Why did Amazon do this? And it's the future value. And this is when we got into, I played in it 2014, 2015, and I played the options, and I thought it was funny. You guys go look through my channel. I literally have a video I posted it in 2015. I turned $600 into $30,000 on 2 plays with Netflix and Amazon. And it's funny because I ended up even exercising some of those options, and I never really thought about it, but that $30,000 essentially turned into $160,000 because I exercised those, and I bought a lot more Amazon all throughout this. And I, you know, for me and my account, it's different. I never viewed my 30,000 profit as just keeping the shares, but think about it. It was at $300 as or $350. I got to exercise. It was about $35,000 for 100 shares. Those same 100 shares would be at $162,000 right now. So, and that they were at 200,000 at one point. So one, you see what I did with long-term investing. You could use options to even exercise. But again, the key here is future value. And with Amazon, it was their cloud. And people were selling it off and they didn't like it because Amazon was making a lot of money and they were doing good. But people's future value expectations, they didn't think Amazon was going to make money because although they were profiting, they weren't showing a net profit. They were spending the money on shit, and people didn't like that. You know, the free shipping, the Amazon cloud. And then what started to happen, it started to turn around, and people's future value of Amazon started to change as they got the cloud. They started making money, and you could see the dramatic price jumps. It is literally future value changing. And that's what happens with stocks. People aren't paying, you know, when we get into fundamentals and I start showing you guys some of that, you guys get to see that it's not, you know, a stock is worth very little. Like if you actually understand what the real value of what you're paying for in a stock, you're like, why you're overpaying dramatically, but it's because you're paying for future growth in earnings. So that's where you guys need to understand it. Same thing with options. When you're buying an option saying, sell me the stock here, or I'll buy the stock from you at this price, you're literally making an explicit statement on what's going to happen with future value. So this is where I want you guys to understand. Hopefully that little quick overview gives you an idea of, okay, future values and what's going on. So now, why is there the trade war affecting it, or the yield curve? So let's now talk about the yield curve and why the fact that it inverted is just going to be bad in general, because now investors think like this, but also computers and algorithms, you know, they have models for pricing stuff in certain events, and they're pricing in the future. That's where the liquidity and pricing comes. You see how annoying this dog is, man? Jeez. But so what was I saying? Jax, you're really distracting me, man. You're killing this video, bro. Come on, why you gotta be like that? I gotta look back at my chart. It'll remind me. Oh, the yield curve. So what I was saying is that if you're looking now at like the yield curve and what's going on with everything, it's like, where does this effect come from in those computers? Is that people understand what happens when yield curves invert and what it's coming from, and there's other factors, but now essentially people's future value with everything going on from trade wars, oil, this and that, as things get worse, the market could stay the same. It's not saying that the economy is crashing or doing bad. However, people start pricing in their future value and future pricing now. So what they're expecting for 2020 in 2019, people are going to start doing now. That's how investors work, because they're thinking long term and they're thinking holding. That's why understanding these sell-offs, if you want to predict them or figure out how to get a better understanding, find the events that are changing future value expectations of a company, country, industry, whatever it may be. Because that is literally what is occurring here. That's what happens with the yield curve. The trade wars. At first, the market didn't react to the trade wars. People didn't take it seriously. Then it came back in February, and then we saw it again in March, and then it crept back because people had uncertainty. They didn't take it seriously, and now it seems like, okay, people are pricing in the future of that, the future value of that. Now with the yield curve, now all these other risk events, they start to get priced in. So people are pricing in the future today. So that's why markets go up, or that's why to make it come back up, unless people's future expectations of growth and earnings is going to change, you're going to see prices at a new range. But and again, in this market, like I was saying in the last video, things are just happening faster. We're in the iPhone X day and age of stock market and declines and corrections where it goes down and goes up. We've corrected before 10, 15%. We've done that in a 30-day period. So it's just very, very interesting where we're staying here. But that's why with these events, I want you guys to understand that what's causing this, it's future value. So China, emerging markets, and when people see the currencies, and now Iran, the Huawei, all this, it's just clear you could now say, you know, maybe 2019 might be a little troublesome to deal with stuff. And now what is that going to mean for 2021? Or if people are saying, okay, the yield curve says 2 years we're going to crash, I don't think investors are going to be pricing in healthy 2-year expectations. So that's pretty much the gist of it. Hopefully you guys get this. Tonight we're going to talk about options and stuff, but you guys can bring this up and we could discuss it. Tomorrow morning is going to be very, very interesting. I'm going to stream for you guys, so get ready. I hope you're prepared. We have to get 100 people on there, though, or maybe 1,000. I don't know. But either way, I love you guys. I'm excited for this all. Pay attention. This is probably, like I said, one of the best learning opportunities. Don't even focus on the money right now. The fact that you get to be alive during an experience like this, you know, being aware, you know, I got to live through 2007 and 8, but I started trading then, and I wasn't as conscious as I was now. I wish I was, because I would have been so much more prepared. But, you know, things happen. But you guys get to live through this. Pay attention. There will be earnings opportunities for you, but don't, you know, the value in and of itself, and watch closely. Start paper trading. Go see what's happening and start looking up info. I'd love it when you guys comment, bring stuff to the table. We could always research it, and that's what we're going to be doing on the stream tomorrow. So it's going to be exciting trading day. I hope to see you guys there. And tonight, I love you all. Peace out.